Good evening, everyone. Welcome to my weekly video on the stock analysis. So we are going to look at the Singapore market as usual, and I'm going to touch on the US market as well. So covering a few counters that may interest you. So without further ado, let's take a look at the stock chart right now. So what you're looking on the screen is the STI stocks or the STI index. And what I want to focus right now is this level, which is the support level at 3164. So what you see in this level is that STI has tested this level today. And with this, it may potentially lead to a change in trend. So let me explain to you why. Because when you look at the market movement in an uptrend, you are looking at the higher low, higher high. So in this period of time, during this period of time rather, you find that we have the low, and then we have the higher low, and we have the high and the higher high. So this established the uptrend. Now, if we are talking about sideways, we are looking at the market to move same high and same low. So you can see that the support level over here, just illustrate further. So here you can see the support level over here has been tested the second time. And then what we are looking at is the high next. So this part hasn't been established yet. Okay, as you can see here that the index has established this high at 3222, and then now with the same low happening, okay, tested. So the next is to establish the same high. So if the index goes up to test the 3222 resistance and pull back, then we establish the sideways trend. So what we are looking at is a potential change in trend for STI. So with this, what would happen to our the rest of the counters in the listed in the market? So if let's say STI managed to establish this sideways trend where a rebound happens to the resistance and we fail to break through, at least during this period of rebound, there will be some stocks that might be going up. So let's see what are the stocks that is similar to STI and holding at support level. Now let's start with OCBC over here in this list. You can see that from this chart, we have OCBC establishing a mini sideways as well. As you can see from the arrows over here, the highs are almost the same. The lows are almost the same as well. So in this part of the movement, we also call it consolidation. So as the stocks establish the consolidation levels, or rather the range of trading, what we want to see is that where the stock price is traded most. Okay, so if the stock price trade mostly at the lower range, which is say that the OCBC stays at 1175, right? There might be a chance that it breaks lower, because as it lingers at the lower level, the lower range, the chances of it going down is higher. So vice versa is the same. If OCBC stays at the high at 1195, traded at 1195 most of the time, so the chances of it breaking up is higher as well. So we have to look at the next level that OCBC will go to. Now, if you are thinking of getting rid of this counter, say you traded and you intend to have this as a short-term trade and want to cut out just in case if it breaks down, the reference level for you to refer to is here. So OCBC must break below 1170, so in order to go down lower to the next major support at 1152. So if you do not want to hold this counter for long term and want to get rid of it in the short term basis, once it breaks below 1170, this is where you should consider getting rid of this counter. Okay, for now, this counter is still doing well because it's still holding at the support level from 1170 to 1175 range. So anything can happen. It can just rebound up to retest resistance as well. Now, looking at DBS, DBS has a good day today, relatively good day, because despite lower opening, DBS managed to close higher in the positive region. So this actually tells us that the support level managed to hold. And what we want to see is if we bounce back to test resistance level at around 29.32, then this will help DBS to keep its uptrend, because by rebounding back to 29.32, we would see the higher low established and uptrend continue to form, or rather to or the stocks continue to move in the uptrend direction. Then we have UOB. UOB is very similar to OCBC. Has been consolidating over here. The only part that I don't like about UOB is that during this period of trading, you tend to see the uncertainty of the movement, where we see that it has a lot more higher opening and lower closing. Okay, so you can see all the series of black candles over here. Now, going back to OCBC, it's fairly similar, but OCBC tend to have the movement where it shows a clear sideways, but UOB, we don't see a range of trade established as yet, but then we can see that the overall shape is that it has a high over here. But nevertheless, it doesn't matter what kind of shape that is going to be, but most importantly is which levels should we look up for UOB. So we are looking at UOB breaking above 26.26 to resume back its uptrend, while breaking below 25.75 will be a potential signal for more downward movement. Okay, so no doubt that we don't have a clear movement here. To establish a clear movement is fairly simple. What we just need is that UOB break up above 26.26 to give us a strong sign of potential upward movement. But do take note that some rebalancing act is coming. Some action taken by MSCI, where this bank may be sold down for some funds to free up, so that this MSCI can buy C Limited to include in their index. So we got to watch out whether this happen or not. So if this would happen, support will break, and when the support break, we will expect a high volume break of support. Case in point is where I mentioned last week video, where Yang Zijiang example came in. So this is the second time I mentioned this. So let's highlight this again. You can see this extreme volume over here. You can see that Yang Zijiang breaks its support over here. So this is the action of MSCI selling Yang Zijiang, taking off Yang Zijiang from its index. So in such a case, we may expect the three banks to have a similar action, but the only thing that we don't know is when it might happen. So do watch out. Okay, now today market again is not doing very well, as we can see heavy selling, or rather some action of sellers are selling. Okay, so we are looking at the AEM continue its downward movement in search of support. So its horizontal support is right now at this 398 level. So if AEM can hold at this level, there is still chance for it to rebound. So we are just a few cents away. So we shall see where this counter would take itself to. Because if this counter, like I say, managed to hold at 398, then we see a chance of upward movement. For UMS, at the ending, the closing heavy selling, we can see it got matched down, it got matched lower as well. And this it doesn't come as a surprise, because as you can see that as it goes up higher, it looks to be exhausted because of the candle pattern form. We don't see a convincing movement, and together with this resistance zone that UMS is trading to, the normal pullback is quite a norm. So here we want to see whether where UMS will be supported, or which support can UMS hold on to. So at 1.35, there's one support. Now, if we can't hold on to this 1.35, the next support level at 1.28 may be the level to watch out for. Of course, we can also use indicator, the moving average, as a gauge of where the support is likely to be. So if 1.35 can't hold, the next support might be around 1.30, but the key support will be at 1.28, because you can see the confluence of support where 50-day MA and this horizontal support comes together. So this is called a confluence of support. So it tends to be a stronger support. We also witness a Valuetronic pulling back after a failed breakout from the double bottom. So we call this as a failed breakout over here. The double bottom is here. So when the stocks pull back and close below its resistance, we consider it a failed breakout. If Valuetronics continue to be sold down, the key support level to watch is here, which is the horizontal line that I've drawn earlier. It's about 5.9. Okay, so we shall see where Valuetronic going to rest. Typically, this counter is moving rather slowly, not to my appetite for trading, but fundamentally, it still have some merit. So we shall see where this counter would go, as if it goes lower, how low it can go. Venture today confirmed the failed breakout. As you can see, it broke out strongly from this resistance this particular day, and then today it closed back below this resistance, establishing a resistance at this level, which is a resistance of the past as well. So you can see this is a resistance. Then we have resistance here as well. So this whole zone, in fact, is a very tough levels, very tough levels for this venture to trade. So if venture continue lower, the next support for us to watch is in fact at 1991. So let's see whether tomorrow there will be more continuous selling, or tomorrow we see some rebound and then establish some rebounds for support. And in fact, that would be an opportunity, a window of opportunity for us to get into some stocks if the market manage to recover. Then I'm going to talk about Sembcorp Industry, which is also resting as support level. This falls into the green energy category, and then we are looking at this support level being tested with extremely high volume. So if tomorrow there's some rebound, let's see whether it can retest this $2 level. It's very crucial for Sembcorp Industry to rebound tomorrow, because if it doesn't rebound, it may confirm this weekly bearish candle where it may start to go down further like this. Okay, so it's very important for the wick to close up high or even test $2 so that this counter can resume its uptrend. Keppel Corp, another green energy play. The opening was decent, but suddenly there was a huge selling. The good thing is the volume isn't that high. The trend remains intact. If this counter can close back above 550 tomorrow or the next following day, the resistance to watch is 555, where if this counter were to break above it slowly, gradually, it may hit back to 576 level. Okay, then ComfortDelGro is also sitting at support level. Recent news is that ComfortDelGro is going to bid for the EV infrastructure in Singapore, and we are looking at this potential winning of the bidding, and if so, of course, share price is going to appreciate further. So let's see whether can it hold at this support level. If it can, the next so a rebound from ComfortDelGro closing at 177 will be interesting tomorrow. Then we have SIA Engineering. So just like to extend some congrats to some of the traders over here who has SIA Engineering since I highlighted it at this level at 2.11. I myself added some position over there, and it came to a surprise last Friday that this counter shot up, broke up from its resistance at 230, and then went to as high as 254, 55. Before today, we see some pullback. So it's very natural for market to take profit, especially with such a long rally or long white candle, so to speak, a strong rally. And then, of course, they would like to realize some of their profit. As you can see, in many occasions for SIA Engineering, we have this pullback after the strong rally, strong white candle pullback thereafter. So if the pullback were to really continue, 230 will be an interesting level to watch, because it will have to act as a support level. Then going forward, if it doesn't go down to 230 and then start to consolidate around this level, then we may have a flag pattern or pennant pattern going forward. So we shall continue to watch where SIA Engineering is going to be. And ST Engineering Friday also did quite well. Basically, what it did was that it managed to open higher and close higher. So the tricky part about ST Engineering is that before this convincing white candle, it was an uncertain period for this counter, where it tend to open higher and close lower, open higher and close lower. So this gives us the sense of uncertainty, because if a stock is strong, it should be able to open higher and sustain its upward movement. But why at every opportunity of a higher price movement, the market sell down? So this buffer needs as well. So Friday was a strong, convincing movement. But overall, if you look at the candles itself, it's not easy to trade on this counter. So the best is to look out for support and resistance and ignore where the candles, what the candles is forming for the time being. So if you are looking at the support right now is at 390, the resistance now is $4. So if the counter can break above $4, of course we will see more upward movement to come. And of course, if it breaks below 390, then we have multiple levels of support to watch. In fact, the whole zone, I would say, is the support 388 to 383 to 388. So once it breaks below 383, then we can start to see a more downward action coming from this counter. So not easy for this counter. So for those who are trading, do take extra care, or you can have a longer term view on this counter by looking at this weekly chart. Okay, so if you look at the weekly chart, we will look at where the candles are, and then if you set a resistance and support, then you can see that, oh, okay, we have 411 as the next major support to look out for, and then the support to look out for is 3.83. So that will be easier. So you base on 410 or 383. So if this counter break below 383, probably you get out. Then if you set a profit target, maybe you aim for 410. Then Q10 was highlighted in my email, wasn't in the video, was in my daily email to my clients, my members. So this counter actually broke up from the double bottom formation. It's pretty strong today. Just a few days of consolidation. Then today we have a high volume breakout. So the next is to fill up this gap and to establish some price action at this level at 112 resistance. Yangzijiang, of course, just now we talked about Yangzijiang as an example, but we can see that Yangzijiang, in fact, managed to hold on and remain in the consolidated, consolidation zone, where this counter has the range of trade from 122 to 1.32. So if this counter managed to hold above 130 range, the chances of breaking out increases. So let's see where this counter is going to be. Now, from this point onwards, I'm going to switch over to the Nasdaq market. Okay, so we are going to look at the Nasdaq 100. So for those who followed my video, in fact, I did mention last week that do watch out for Nasdaq, because you tend to see this happening where after the stocks are corrected from a bottom, you start to move up higher. So I quoted example here, and I quoted example here as well. Okay, so this is where it came through. So the pattern repeat itself. Now we are looking at Nasdaq going back to its high, and there's a chance for it to break out to go higher. Okay, if the history repeats itself again. Now, if it doesn't break out higher and pull back, of course, the opportunity for us to get back into the market is around 13,300. Okay, so this in fact is a important support for Nasdaq. Looking at the Dow, we are looking at a very strong uptrend. Like I say, this is a flat pattern, and then we have a breakout, and Dow continues higher, hitting all-time high. So tonight is very important. If tonight you can recover well and then hit another all-time higher level, of course, we may see this index hitting close to 34,000 level. Now, of course, nowadays they take turn to correct themselves. So when Nasdaq hit all-time high first, it corrected. So now Dow already hit all-time high. It may correct itself while Nasdaq continue to scale higher. S&P 500 gets the best of both worlds, because it has some counters in the Dow, some counters in Nasdaq, and then it has been continually scaling higher. And of course, many has started to shop for bubbles, because the S&P 500 stocks has been going up higher. So with no apparent weakness right now, tonight we're going to see where the candles is going to end up or end down. Okay, so other than that, some counters that may interest you. You remember Caterpillar? It's on the uptrend, so it's holding very well at the support level and from the second hammer here. So this presents an opportunity, especially if we have a closing above 232, and that will give us a confirmation that this counter may retest back resistance 236. I'm not aiming for 236 as a profit target. but rather as an overall chart where this counter is going to form this formation, a cup and handle formation or ascending triangle formation. As it breaks up, then we are looking at a higher level at about 259 or 260 level. Okay, so the stocks is still very much in uptrend, and this is where we can consider moving in this opportunity, window opportunity. Rockwell Automation forms a hammer at the 20 MA as well, and this may suggest more upward movement to 275 resistance or even breakout from there. Okay, so with this ends my video for this week. I hope you enjoy the sessions. So any questions, please feel free to leave a message in the YouTube, or just if you know me, my numbers, you can text me personally or drop me an email. Okay, so with this, take care for the rest of the week, and have a good week ahead.